Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Momentum stock time once again. Let's bring in Mike Vodicka, who's our momentum stock analyst at Zacks.com, to fill us in on just where the momentum is headed on a couple of stocks that he wants us to know about. Jefferies Group being one of them, ticker symbol JEF on the New York. And what do? They operate, they're in the investment banking space.
Yeah, that's right. This basically, if they function in financial services, it operate as basically an investment bank. They have a number of different large segments.
Okay.
The company's been around since 1962, so they have a pretty strong history and a market cap of $3.35 billion, so fairly sizable too.
No TARP exposure here?
No TARP with Jefferies Group. They've done fairly well. I mean, with the rest of the financial sector, their share price has traded lower over the last year, but it's been fairly resilient. More recently, which is what we're going to talk about, they pre-released second quarter earnings, and they were far ahead of analyst estimates, so that's given their share price a nice boost.
Yeah. We'll
see that in the chart.
All right.
But just to go through the numbers real quick, this happened on June 24th, and they recorded record revenue of $500 million. And they did $341 million last year. They had income of $50 million, and they project that's going to produce earnings of 29 cents per share. That's 14 cents more than the analysts were looking for. So it was a fairly strong quarter. To go into the details of the earnings, this is something we've seen from a lot of the financial companies is they had really strong gains from their trading in commodities and fixed income. Things like energy was very volatile during the quarter. That really helped a lot of these investment banks do well in the trading. Mm-hmm. And the credit spreads for the fixed income trading were very wide. And when the spreads are wide, again, it makes for profitable trading. So that was one segment where they had nice gains. And the other one was their actual investment banking segment was up 149% revenue year over year. And the reason for that is that competition has gone away. There are not as many banks anymore, so they're
smaller space to operate in.
That's right. So they're scooping up some of that extra business.
Yeah, they're almost as profitable as I am, but
not quite though, right?
Yeah.
So after word of the great quarter came across the wire here, estimates got a big bump, but generally speaking, estimates have made a very big move here in the last 90 days. Initially, analysts were looking for a loss of 12 cents. Now they're projecting a gain of 84 cents.
Oh.
So we've seen a really big swing.
It's a big difference, yeah.
It really is, yeah. So what that translates to on the chart here is this is a stock that really took off in early March with the overall market, and it bottomed out at about $8, and recently it advanced to just about $22. So it's up almost threefold in the last 3 months. Pretty big gains.
Healthsouth Corporation is another one you've written about recently, HLS, the ticker symbol. They're in the patient rehab services.
Yeah, that's right. They operate 90 rehabilitation facilities, and they actually own 65 of them. So they're kind of a little two-tiered in that approach.
Right.
They've been around since 1983, and they have a market cap of $1.2 billion. It's a little smaller than Jefferies, but not too small. Small cap technically, though.
Yeah.
This kind of plays into something we've been talking a lot about here in the momentum sequence is happening in the healthcare is that, these are strong demand for these kinds of services here. We definitely have an aging domestic population, and those dollars continue to flow in the sector. And healthcare services in particular have done fairly well, and that's where Healthsouth Corp comes from. We see this show up in their earnings on May 5th. Their income was up 3 times year over year. Again, that's a huge gain. And think about the economic environment over the last year. Most companies are posting, significant loss or significant dips in both revenue and in income, and their income was up 3 times, so that was nice. Mm-hmm. And of course, they had the nice beat, earnings per share at 39 cents, 19 cents ahead of the estimate, so that was solid. And again, since the word of the good quarter hit the street, estimates have been trending higher. With the share price. So what that means is valuations are still fairly in check. It's not too overvalued. It's stocks trading with a forward PE multiple of 13 times, and I think the market's right about 13 or 14 right now. So it's in line with the market, but it has the nice next year growth projection. Analysts are looking for 17% growth. So based upon the valuation, that's fairly attractive.
So that little downturn I'm looking at the end of the chart there is just a temporary rest from the upward momentum that's going to resume. Is that correct?
Yeah, it does look like it's taking a little breather. You can see from the chart that it did cross a significant area of resistance at 13, and once that happened, we had a little spike in volume, push it higher, And then when that happens, usually there's some profit taking, so it'll take a little breather. And then on a longer-term basis, the trend is still in play.
All right, I'm going to take a breather here too. But do you own either of these two?
No, I don't.
All right, meantime, if you want to check out some other stocks Michael has written about, go to Zacks.com's homepage and go to the upper right-hand corner of that homepage where all of the Zacks ranked buys are listed. And there's a headline that is right next to each category. There's one next to the momentum category as well. Click on it. It'll take you to Mike's most current story and an archive of some others. With Mike Vodicka, I'm Terry Ruffalo.